So joining me now to discuss the latest is Michelle Snyder, Partner and Director of Trading Research and Education for the Market Gauge Group. Now, Michelle, let's start with this new merger. I know we've talked a lot about how much tech stocks have struggled in recent months. So how is the news that AT&T is planning some major competition for Netflix and Disney having an impact on the market right now?
Well, when Netflix reported earnings, that's really when they started to run into trouble because the numbers were already starting to shrink in terms of the number of subscribers that they were looking for going forward, and they were talking about raising prices. So the fact that there's this tremendous competition now coming from AT&T obviously does not bode well for Netflix or Disney, which both fell, but so did the stock of Discovery, and so did the AT&T stock fall, while some of the tech stocks actually fell not as much today for other reasons, which I know we're going to talk about. So what's interesting to me in terms of the whole sector of the streaming services is the timing seasonality-wise. We're getting to a point now where people are coming out, and actually what's interesting is the stocks related to movie theaters actually rallied today. So it's almost like I think they may have to sit through some storm here as we get through the rest of the spring, summer, and the fall, and then maybe when people start going back indoors for winter. But at this point now, in terms of the overall tech, I think there's a real separation between what the streaming companies are doing in Netflix and Disney, AT&T, and what the big tech are doing. They're really looking more now at yields and the inflation numbers and what the Fed says this week.
Yeah, certainly, and it's interesting to see, especially for those streaming companies, how they have had so much reliance on them over the last year, and now we kind of see people wanting to go out a little bit more and maybe not staying home and watching Netflix quite as much as they would have in the past. Okay, now looking at the markets overall, there has also been a big focus on inflation, and with the latest report showing how consumer prices are increasing while the global supply chain struggles to keep up, the message from federal officials continues to be that this won't last for long. Are there more concerns among investors than the market is letting on right now?
Well, I certainly am concerned as one who was trading commodities back at the last super cycle of inflation, which I'm almost embarrassed to tell you how many years ago that was. I saw the stretch between the ratio of equities to commodities were at a 100-year low. So forgetting about everything else for a moment, just in terms of that type of ratio, you knew we were getting close to a point. So now enter the pandemic. So what does the pandemic do? Supply chain disruption, low labor force. But on top of that, a lot of the raw materials had cut back in production to basically hedge against a glut. And now we have a short supply. And raw materials, you can't just create them. They take a while to mine or grow, depending on what you're looking at. And the supply chain disruption may at some point relieve itself over time as people start to come back. But at the same time, it's going to take a while now, I think, to really cycle through and get back to being able to produce some of these raw materials. So the short answer is I think transitory is very much going to be defined by the time frame, and I think we could be looking at least a year to 2 years, maybe 3, before we start to see production come back and alleviate that short supply with the high demand.
Okay, so speaking of sort of the messages that we've been getting from the Federal Reserve, them trying to keep everyone calm, we know that we're also waiting on the minutes from their latest meeting, and they're set to be released this week. Is there any chance of the Fed raising interest rates or making significant changes to their policies that are different from what we've seen over the last year?
Well, of course, there's a chance, but if you think about the situation they're in, probably maybe my top 3 unfavored jobs to have right now would be to be Jerome Powell working at the Federal Reserve, because he's really in a tough spot. If he even intimates as raising the rates, with the economy coming back but still relatively fragile, and then there's still the question mark of what happens after we come back to keep growing, then he really puts the kibosh not only on economic growth, but he also puts a kibosh on the markets. At the same time, if he doesn't, as we're seeing with gold and silver particularly rallying like crazy today, he's really taking the chance of inflation getting out of control. So I'm going to be very interested to see what he says, but I'm expecting him to keep it sort of low key and still use that word transitory.
Great insight as always. Michelle Snyder, thank you so much for your time.
Thank you, Rachel.